Hello and a warm welcome. You're watching Business at 9 with me, Jude Sanith. Let me start you off with some action from Wall Street. In fact, let's take a look at how the US markets are performing this Monday. The Dow Jones Industrial Average jumped 1.3%, while the S&P 500 gained 0.9%, and the Nasdaq Composite advanced 1.2%. In fact, these stocks rallied after US President Donald Trump paused planned strikes on Iran, thereby easing geopolitical tensions and sending oil prices lower. Communications services and software stocks led the gains on the Nasdaq, with Meta surging more than 6%. Meanwhile, Treasury yields slipped as easing oil prices helped temper inflation concerns. The benchmark 10-year Treasury yield fell 7 basis points to around 4.67%. Meanwhile, it's a party on the crude front as well, even as prices have fallen due to the latest geopolitical developments, with the US easing off on planned strikes on Iran. In fact, my colleague Meryl is here with more information. Meryl, it's largely an easing of sorts thanks to the geopolitical situation, you reckon?
That's right. We have seen crude prices take a sharp hit, with both global benchmarks seeing sharp cuts across the board. Brent crude is down nearly 5% right now, and WTI crude has also slipped upwards of 6%. And back home as well, we're seeing MCX crude futures have also fallen to a nearly 3-week low. Well, Wall Street as well has reacted to this, with the street seeing a firm positive opening in the first few minutes, and soon all major indices have now opened to upwards of 1% of gains, as easing geopolitical tensions and also the hopes of softer inflation have played through and brought about optimism in the market. Investor confidence has also gotten a lift, as New York Fed President John Williams says he expects inflation to continue easing, which is now reinforcing expectations that price pressures remain on a more of a moderating path. Another big trigger, of course, is the Brent crude falling, and this has also seen the 2-year US Treasury yield easing, which is signaling lower inflation expectations and also supporting equity markets. Among stocks in focus, Amazon has surged nearly 5%, taking its total market cap to upwards of $3 trillion, making it one of the world's most valued companies at this moment. So we're seeing a cascading effect from the easing of crude prices, which is now playing into heavy optimism for all global markets right now as we speak.
Right, Meryl, thanks for that. Now, in his latest Truth Social post, Trump has said Iranian leadership is unbelievably duplicitous. In fact, they asked for a meeting. Some would say beg talks begin with more scheduled in the immediate future. And they say openly and proudly that they are not having any discussions, that nothing is being talked about. They are only dealing with Oman. They then go on to give their usual blather in saying the Strait of Hormuz will be operated powerfully by them when it is already completely controlled by United States Navy and our blockade, or as some say, the United States wall of steel. Nothing gets through to Iran unless we want it to, and nothing will get through unless a deal or a total surrender is accomplished. Whether Iran wants to admit it or not, we are in fact talking of a solution to a problem that they have caused for decades. It is very simple. Iran will never have a nuclear weapon. Right now, in fact, government back home has announced OFS of LIC proposing to divest a 2.5% stake with an additional 4% green shoe option. The floor price for the offer has been fixed at $382 per share, with OFS, in fact, opening tomorrow for non-retail investors. My colleague Prakash joins in with the details.
Well, that's an important development coming in a series to divest the stake through minority, divesting a stake through OFS. The government has now launched an OFS for LIC, a very significant development coming in. In fact, offer for sale in LIC opens tomorrow for non-retail investors, whereas retail investors can bid on Wednesday. Government offers to disinvest 2.5% equity with an additional 4% as a green shoe options, wherein floor price has been fixed as at rupees 382 per share. Interestingly, this has been a new practice that has been adopted by the government after big transactions are not getting through in an order to meet this investment target. And therefore, the government is now divesting minority share in public undertakings. And now an offer for sale for LIC has been announced. This will help government to achieve minimum public shareholding milestones ahead of the schedule, what DIPAM Secretary has mentioned. A very significant development at this point in time. Back to you.
Right, Prakash, stay with us. Now, government has proposed relaxation in eligible investment fund managed from India to avail tax exemption on its global income. This has been proposed to attract offshore funds to establish India as a global fund management hub. Prakash, tell us more.
Well, the Finance Ministry has proposed tax rule changes to attract offshore funds to establish India as a global fund management hub. You are aware of the fact that the Finance Minister has already announced these amendments in the Union Budget for the financial year 2027. Now, these amendments are being proposed through a bill. In fact, the government has proposed easing of the eligibility norms for eligible investment funds managed from India. Offshore funds seeking tax exemption on their global income will no longer have to comply with various conditions. Provisions such as maintaining at least 25 investors and limiting any single investor's participation to 10% will be removed. Along with that, it also proposes to do away with the restrictions on investing more than 25% of the corpus in a single entity. Along with that, as I mentioned, that the amendments are being proposed through the Taxation and Other Laws Amendment Bill 2026, which is likely to be introduced by the Finance Minister very soon in Lok Sabha. In fact, it has already been announced by the government in the Union Budget for financial year 2026-27. Now, government intends to make certain amendments to establish India as a global fund management hub, a very significant development at this point in time. Back to you.
Prakash, for joining us with those details. In the meanwhile, the centre has raised the windfall tax on diesel and aviation turbine fuel exports, even as global crude prices remain volatile. My colleague Kuldeep joins us with an update on that situation.
Well, the government has revised windfall gain tax on exports of petrol, diesel and aviation turbine fuel for the fortnight effective 1st of August. The export duty on petrol has been increased to 3.5 rupees per litre, while the export duty on diesel has been increased to 25.5 rupees per litre, and this also include RIC of 1.5 rupees per litre. The export duty on aviation turbine fuel has been increased to rupees 22 per litre. Well, we must tell viewers here that the government introduced windfall gain tax on petroleum products on 27th of the March to ensure domestic availability of petroleum products in the backdrop of West Asia crisis. Now, the government revises these duties on every fortnight.
Now let's take a look at how the markets fared today. Nifty closed above 24,750 mark, surging over 1.5% in trade. Broader markets also posted gains. ID emerged as the top sectoral gainer, while majority of the sectors ended in the green. Grasim and TCS were the top gainers in Nifty today. Snehi is here with more details.
Well, yes, it's been a stellar start to the week because it's been a wonderful Monday for the street. You've seen a very good uptick coming in on the Nifty to the tune of 1.6%, 24,774. Thereabouts is where we've shut shop for the day. It's an uptick of almost 400 points on the spot basis for Nifty, so very good show coming in over there. Sensex too higher by 550 points or close to 0.7%. Nifty Bank has done well for itself. It's a 1.5% uptick over there, but what's also looking very robust is the breadth of the market that has been really positive, because if you take a look at the Nifty Mid Cap Index, that was higher by 1.25%, as was the case for the Nifty Small Cap as well. So good show coming in across the board. Now we had a lot of factors that were at play. You had crude cooling off that did wonders for an Interglobe Aviation. Paint companies were doing well, as was the case with rubber related companies. You had Jubilant Foodworks that was also doing well, up about 7% in trade. So good move coming in on the crude front. On the flip side, if I take a look at what the sectoral performance has been, IT has been the winner through and through. An intraday uptick of 3 3.25% on that index, with names like LTM, TCS, Infosys, Emphasis, all of them participating in this rally with gains between 4 and 7% each, followed by Nifty Bank, FMCG, Metal, Auto, Finance, PSU Bank, Realty. While we're speaking of the FMCG index, the gains were led by ITC. Good show in terms of what the stock has done, despite the numbers being weaker than estimates, but brokerages have upgraded the stock and they believe the worst is behind for the stock, which is why ITC has done well. On the flip side, you've got Nifty Media. That was the only index that shut shop in the green on account of a massive fall in Z Entertainment because its promoters have been banned from participating in the securities market for 2 months. Pharma, energy, oil and gas were some of the least gaining sectors in trade. Now, if I take a look at the broader end of the market, the breadth was absolutely in favor of the advances. 380 stocks in the green with 120 stocks in the red. That's what the advance decline ratio tilt looked like. Urban Company tops 500 Nifty 500 gainer, almost a 13% uptick on very strong Q1 earnings, followed by Balrampur Chini, Pine Labs, Aegis Logistics, Reddington, LTM. You've got one MobiKwik that did well as well in terms of earnings. On the flip side, joining Z Entertainment in the red is Muthoot Finance on weak set of numbers, lower by about 7.25%. Blue Jet Healthcare, Latent Few, Narayana Health, CG Power, Thermax. Most of these are earnings candidates, with brokerages also giving these stocks a thumbs down. So all in all, that sums up the kind of day that we've seen. Lots of stocks in focus on the back of earnings, brokerage reactions. You had GAIL that was under pressure on the back of multiple downgrades also coming in. So these are some stocks to watch out for as well in terms of how they react on Tuesday. But all in all, it's been a wonderful day of trade for Monday and a very strong start to the week.
Well, Snehi, thank you so much for that market roundup, as comprehensive as always. But moving on, as ET Now has been reporting, FCNRB deposits have surged under the RBI's special swap window, with outstanding balances nearly doubling to $60.6 billion in under 2 months. Fresh mobilization too has crossed $36.7 billion, providing strong support to forex reserves and rupee liquidity. My colleague Akansha joins in with the details.
That's right. The RBI special measure to attract foreign currency continue to receive a strong response, with FCNRB deposits touching fresh highs. As of July 30, outstanding FCNRB deposits have risen to $60.55 billion, up from $32.56 billion on 5th of June, which means that banks have added nearly $28 billion in less than 2 months. Now, if we take a look at the fresh mobilization under the RBI's special swap facility, FCNRB deposits stood at $36.73 billion as of July 31st. Now, overall total mobilization under the RBI special swap facility has reached $40.82 billion, which highlights the strong response that the scheme is getting, which is being taken by central bank. Now, talking about the top contributors to this scheme, SBI continues to lead with FCNRB outstanding deposits of $13.82 billion. Among private sector banks, ICICI Bank tops the list with $6.06 billion, followed by HDFC Bank at $5.42 billion. On the other hand, if we see among foreign banks, HSBC has emerged as the leader, with FCNRB outstanding deposits jumping to $6.26 billion. If you look at the broader trend, public sector banks' FCNRB deposits have increased to $25.59 billion from $16.75 billion, while private sector banks have seen their outstanding deposits rise to $25.68 billion from $14.95 billion. And the sharpest jump has come from foreign banks, where outstanding FCNRB deposits have surged to $8.97 billion compared with just $603 million earlier. Now, remember, the FCNRB swap window will remain open till September 30, while the window for OFCBs and ECBs will continue till December 31st. So the latest number clearly shows that the RBI special measures have received a strong response from public banks, private banks and even foreign banks for that matter, with FCNRB deposits continue to drive foreign currency inflows into India.
Now, with the 34% of the Nifty 50 companies have reported Q1 earnings have broadly been better than expected, brokerages say earning downgrades are moderating, with financials, materials and utilities leading the upside. Ashesha joins in to take us through the trend.
Well, yes, we are more than halfway through the earnings season, and let's take a look at how earnings so far have been. And first up, let's start with the Nifty 50 pack and the number of companies that have reported earnings above street expectations. Now, about 34 out of 50 Nifty companies have already reported their earnings. 14 companies have managed to beat street expectations. 8 have been below street expectations. 12 in line, and 4 companies have reported a mixed bag. So that's how the Nifty 50 scorecard so far has been. Let's also talk about what brokerage houses are saying. Now, Citi is saying that the companies under their coverage have reported earnings better than expectations, and this is 4% ahead of their estimates. Morgan Stanley, meanwhile, says that revenue growth of about 19% is what the industry has reported, 6 percentage points ahead of their own estimates. Motilal Oswal, meanwhile, has also gone ahead and said that the numbers have largely been better than what the street was working with. So across the board, the consensus saying is that the numbers this time around so far have been better than what the street was working with. Let's also talk about the 3 factors that weighed heavy on the numbers in the quarter gone by. First, of course, was the input cost inflation led by West Asia crisis. Second is net interest margin pressure, especially for banking companies, and mounting losses for oil marketing companies because of the surge in crude oil prices that we have seen in the global market. These are the 3 factors that largely were weighing heavy on earnings season in the first quarter of FY27. Now, Citi says that consumer durables, especially discretionary auto and durables, have delivered better than expected growth. Morgan Stanley says that average EBITDA growth stood at about 20%. The strongest profit growth came in for utilities, materials and financials. Industrials and utilities were leading the beat this time around, and consumer staples were some of the laggards that we saw in the quarter gone by. So this is what Morgan Stanley has to say with respect to specific sectors and the kind of performance that we saw in the quarter gone by. Meanwhile, Motilal Oswal also has come out with a report where they say that the upgrade to downgrade ratio stands at 1.6 times. In fact, they say that 70 companies have been upgraded versus 45 companies which have seen downgrades this time around, and hence the ratio stands at about 1.6 times. RIL, Bajaj Finserv, Shriram Finance, Nestle and ICICI Bank. These are the companies which saw FY27 upgrades as far as earnings estimates are concerned. And on the flip side, Interglobe Aviation, Dr. Reddy's, Tata Steel, Wipro and Maruti Suzuki. These are a couple of other stocks which have seen downgrades as far as FY27 earnings are concerned. Motilal Oswal now has financials, auto, new age, manufacturing, industrials and discretionary as their key overweights, and private sector banks, staples, energy, telecom, commodities, utilities and renewables as the key underweights in their portfolio. So this is what the brokerage houses have to say with respect to the earnings gone by. Now, several factors which will continue to remain at play going forward as well. First and the most important has to be geopolitical crisis with respect to the US-Iran war and the developments that take place there. Monsoon progress, which has been below normal so far. Cool off in input prices, which is expected to happen and will perhaps aid margins in the coming quarters. Domestic demand environment, especially rural demand if monsoon is below normal. And the AI trade, and India largely being known as an anti-AI trade, will be another factor to watch out for. So these are the 5 factors which will determine the trend for Indian equity markets going forward. But largely, the consensus has been that earnings so far have been better than what the street was working with.
Right, shifting focus to automobiles next. Sales for the month of July reflected a mixed demand environment. Passenger vehicle makers continued to post strong double-digit growth led by Tata Motors, Maruti Suzuki, Hyundai and Mahindra, while Royal Enfield remained resilient in two-wheelers even as commercial vehicles and tractors saw sequential moderation despite healthy year-on-year growth. My colleague Avi is here to give us a roundup of the sales numbers.
So the auto sales number came in for the month of July, and we can see that the PV segment has performed quite well, with the Hyundai and Tata Motors PV coming in as a surprise, while the Tata Motors CV also performed very well. Talking about the tractor segment, we've seen some very strong performance from Escorts, Kubota and M&M tractors as well. Some numbers that came in line with our expectation was M&M Auto, Maruti Suzuki, Eicher Motors, Royal Enfield and Hero MotoCorp. We saw that these numbers were in line with what we were estimating here at ET Now. The one thing that came in as a disappointment was Eicher Motors VECV numbers, which came in slightly below estimates and was not what we were expecting. Talking about some of the numbers, we can see that Maruti sold around 2,41,421 cars, with M&M Auto selling 1,03,000 cars, and Hyundai coming in as a surprise with 25% growth on a yearly basis, selling 75,000 cars for the month of July. Tata Motors PV, however, was the biggest surprise, recording a 59% growth on a yearly basis, selling 63,760 cars. So Tata Motors PV, led by the EV race that it is headlining for now, can be seen as the big winner for the PV segment. Up next is the CV segment, which was a mixed bag, since Tata Motors CV was showcased a very strong growth of 37%, but VECV of Eicher Motors was a disappointment. Up next, we can see the two-wheeler segment with Eicher Motors RE, that is the Royal Enfield, selling 1,18,000 units with a growth of 34% on a yearly basis, with Hero MotoCorp selling 5,33,000 units, that is a 19% growth on a yearly basis. So double-digit growth for both the companies in the two-wheeler segment. Up next is the tractor segment that has given a very strong performance for the month of July, as the monsoon tension de-escalates and the deficit in rainfall can be seen narrowing. Talking about Escorts, saw a 22% yearly growth with 8,731 units, and M&M Tractors selling 34,420 units, recording a 20% growth. So all in all, a strong set of numbers from the auto sales demand for the month of July.
Now, sources say that exchanges witnessed normal operations under closing auction session on Monday. Closing prices discovered through demand and supply matching. Ankur is here to get us more details on this new breaking update that has just come in. Ankur, take us through this.
Yes, one of the major chatter of market today was what happened at closing auction session now, which started from today. There was a divergence in the prices which was suspected, and many were suspecting, was there any kind of a technical glitch which has happened through exchanges? What we have been told through sources that exchanges function normally during the first day of closing auction session. In fact, the closing prices were discovered through demand and supply matching, and the expectation is that there will be more institutional participation over the next few trading sessions, today being the first day. What happens in the closing auction session is started from today. The auction is conducted at the end of the trading day to determine the official closing price of the eligible stocks, which is FNO in the current case, and that happens rather than the last traded price or the volume weighted average price which was prevalent. So all in all, yes, we have few numbers which has come in as far as the trading which happened in NSE, and the turnover remained around 1,277 crore, and the top traded stocks, which were 10 stocks, which contributed around 30% of the CAS turnover on NSE. And similarly, we are also expecting a statement which may come on from BSE as well regarding the same. So all in all, the plan went as per the implementation which was planned earlier, and the expectation is that as it is implemented in the forthcoming days, there will be more participation and we may see better price discovery coming ahead.
Right, Ankur, thank you so much for joining us and bringing us up to speed with that breaking news information. Ankur there, giving us the lowdown on that auction process. But moving on, the United Spirits has in fact moved the Bombay High Court against an FSSAI order pertaining to packaging, in fact, and product labels at its Baramati facility. In fact, the company maintains that its labels comply with existing legal and regulatory norms and says the issue is in fact an industry-wide concern that does not concern merely United Spirits itself. Meanwhile, the FSSAI has alleged that select liquor models, including those of United Spirits, have been using flavouring that is in contravention and violation of prescribed food safety norms. My colleague Akansha joins us with more on the situation.
That's right. A fresh legal battle has broken out between United Spirits and the food regulator FSSAI. United Spirits has moved the Bombay High Court challenging an FSSAI order related to one of its products manufactured at its Baramati unit. Talking about the issue, FSSAI has barred the sale of select liquor products made by United Spirits, Inbrew Beverages and Mohan Rocky Spring Water breweries. In fact, the regulator alleges that these products use artificial or nature-identical flavouring substances which violate food safety norms. According to FSSI, adding whiskey flavor to whiskey or rum flavor to rum is not permitted under the prescribed standards. So the regulator says these products therefore do not conform to the Food Safety and Standards Act. However, on the other side, United Spirits has strongly disputed the order. The company says its product labels fully comply with the existing legal and regulatory framework and are in line with long-standing industry practice. In fact, the company has also termed this an industry-wide issue, saying the matter is being taken up with FSSI through industry bodies CIABC and ISWAI. Importantly, United Spirits says the order has no material operation or financial impact on the company at this stage. So for now, the issue remains under judicial consideration, and the Bombay High Court's decision will likely determine how these food safety standards are applied to the liquor industry going forward.
Well, with that's a wrap on this edition of Business at 9. Goodbye from me, Shibani Gharat, my colleague Jude Sanit, and the entire team of ET Now.